we are going to discuss forfeiture of shares. Many times some of the shareholders are not able to pay their call amounts or allotment money which is due. In that case, the company cancel the allotment of shares to them, or we can say forfeit the shares. Okay, so I am reading this. In some cases, shareholders fail to pay one or more installments, that is, they are not able to pay the allotment money or the call money. In such circumstances, the company can forfeit their shares, cancel any their allotment, and treat amount already received as forfeited. Okay, that means the amount which they have already paid will not be returned, it will be kept by the company. Okay, when shares are forfeited, all the entries relating to the shares forfeited except those relating to premium already received, okay, will be reversed. All the entries which were passed at the time of issue of shares will be reversed, okay, except the premium received. Now we will discuss the journal entries. First, when the shares were issued at par, share capital account will be debited. Okay, because when the shares were issued, when the calls allotment money, call money was made due, share capital was credited. So to reverse that, share capital account will be debited. To share forfeiture, the amount which was received on application and on calls or allotment will be forfeited. The amount paid up will be forfeited. It will be credited to a newly opened account known as share forfeiture account. Then share allotment, if allotment is not received, there will be still a debit balance in the allotment account, it will be credited, reversed, okay, to calls individually. Say if it is first call, second call, third call, they will be credited. And the narration will be dash number of shares forfeited or for non-payment of allotment or calls made. Okay, all of you be look here carefully. Share capital is debited. Earlier in all the entries, share capital was credited. Share allotment, if the allotment money is not received, will be credited by the amount not received. In the same manner, calls, share first call, second call will be credited, and the amount which was received earlier will be credited to share forfeiture account. That means the amount will be forfeited. Second case, when the shares are issued at premium. In here also, share capital will be debited and the premium which is not received will also be debited. Earlier, when the amount was made due, security premium reserve was credited, but at the time of forfeiture it will be debited to cancel that, okay, reversed. To share forfeiture, the amount received. To share allotment, to share calls, okay. This is the entries for the forfeiture of shares for non-payment of allotment or call monies. Now let's understand this using one illustration. H Limited issued 10,000 shares of 100 each, payable as follows, okay. On application 20 rupees, allotment 30 rupees, okay. Application it is 20 rupees, allotment 30, first call 20 rupees and second call 30 rupees. 10,000 applications were received. All the money was received except the first call and second call on 300 shares held by S. We have to forfeit that, okay. So the first entry is simple. Bank account debit 10,000 shares into 20 rupees, okay. Bank account debit to equity share application 2 lakh rupees. On 10,000 shares, rupees 20 is received. This amount will be transferred to share capital. So equity share application account debit 2 lakh to equity share capital 2 lakh rupees, okay. The application received at the rate of rupees 20 will be transferred to share capital. Now the allotment money will be made due. Share allotment account debit to equity share capital at the rate of rupees 30 on 10,000 shares, okay. Then this money will be transferred to share capital. Bank account debit to equity share allotment 10,000 into 30, 3 lakh rupees, okay. Now the first call will be made due at the rate of rupees 20 on 10,000 shares. Now see, On 300 shares held by S, rupees 20 is not received. So 300 into 20, 6,000 rupees is not received. So there are two methods of recording that, one by opening call scenario and one by deducting the amount. We are deducting that. Okay, so bank account debit 2 lakh minus 6,000, 1 lakh 94,000 rupees. To equity share first call 1 lakh 94,000 rupees. Okay, on 300 shares 20 rupees is not received, so 6,000 is deducted from 2 lakh. Then second call is made due at the rate of rupees 30. So share second and final call to equity share capital 3 lakh rupees. On this second call also, on 300 shares 30 rupees is not received, so 9,000 rupees is not received. So bank account debit 2 lakh 91,000, to equity share second and final call 2 lakh 91,000 rupees. Now we will pass the journal entry for the forfeiture of shares. Share capital 300 shares into 10, so it is into 100. Okay, 100 rupees is the face value, so 30,000 rupees. To equity share first call 6,000 is not received, to equity share second call 9,000 is not received, and the balance 15,000 is received. Okay, the application and allotment money is received, so those amount 2 plus 3 will be forfeited. Okay, on 300 shares at the rate of rupees 20 and 30, 50 rupees, it is 15,000 rupees. To share forfeiture 15,000 rupees. Okay.